Hi, welcome back to High on Utah. I'm Heather Groom, and today we have a special guest, a good friend of mine named Jamie Cline. He's one of my preferred lenders with Integrity First Mortgage. So, Jamie, I just want you to kind of kick it off and
Yeah.
introduce yourself real quick.
Yeah. Thanks for having me on the podcast. I'm Jamie Cline. I've been in lending for 12 years now and started my career at a company where we only did VA loans. So we worked with veterans. I was there for 2, 3 years and then kind of evolved into doing all types of mortgages. But I've loved being in the mortgage space.
That's awesome.
Yeah.
So, tell us a little bit about you, like where you're from, and kind of
Yeah.
give us a little intro.
Yeah, so I grew up in Salt Lake County, grew up in Taylorsville, and lived there until I got married. We were in Midvale for a little bit and started having a family and moved to Lehigh. And we've been here in Lehigh since. So um, did my did my studying at Utah State, and then from getting that done, moved on to mortgages and have been doing that ever since.
Okay, so
Yeah.
12 years in the mortgage industry, so you've seen a
Yeah.
few things,
Yeah.
right,
Yeah.
happen in that
Yeah, it's
time.
been
And
kinda
the
crazy.
crazy time of really low interest rates,
Yeah.
and then also when they shot up. So I actually used to do mortgage origination. A lot of people don't know that. That's a little secret.
Yeah.
But I used to do mortgage origination back in the day. Like I think it was back in like 2000.
Okay.
And it was when people were just starting to refinance.
Yeah.
And so there was kind of this whole influx of people, because at first, before that, interest rates were like 8%, and we all thought we were lucky. Like we were like,
Yeah.
yeah, we're just so lucky we have an 8% interest rate. And then they were coming down, and so people were refinancing. And so I just did that. And anyway, so I know enough to be dangerous is what
Yeah.
I joke around and say. But I was interested in having you on today because we've talked personally, both
Yeah.
of us, about reverse mortgages. And I
Yeah.
get a lot of questions. A lot of my clientele are 50 years. It's almost like they turn 50. And in fact, I'm going to do a podcast episode called I've Turned 50, Now What? And
I think
so
that's good.
about real estate and loans and finances. But a lot of people, they at about age 50-ish, or when they become empty nesters, they kind of look at how their assets are working for them. And if they haven't looked at them and you're listening to this podcast, you should.
Yeah.
You should, because things change. A lot of times people need different house plans. Maybe the big house they had isn't totally working for
Yeah.
them. And a lot of times it's even just a reconfiguration. Like I always tell people, don't, necessarily move into a townhome. You might, be miserable
Yeah.
going from a 5,000 square foot home to a townhome. But at the same time, I like to give them options and like to talk with them about different ideas because a lot of people have their homes close to paid off.
Yeah.
Sometimes they want to buy a second home, maybe in St. George. They're looking at maybe buying an income property. And that's why I like to talk with people about wealth building through real estate. And so, I would say there's a lot of people, though, that have been calling me lately saying, I don't really understand reverse mortgages. And what is a reverse mortgage exactly? So I thought I'll give
Yeah.
you that question. Maybe you can explain that.
Yeah. Yeah. So reverse mortgages, it's a great product for the right person, for the right fit. The basics of a reverse mortgage is when you compare it to your traditional mortgage, you're kind of doing the opposite. So on the traditional mortgage, you buy a home, you put a down payment down, and then over time you pay it down, right?
Hmm.
So as you're in the home, you're building equity as the home value goes up and as you pay the mortgage balance down. And with the reverse mortgage, what it does differently is it allows you to get into the home, or if you're already in the house, you can buy a house with a reverse mortgage.
And that's a good point right there. So
Yeah.
let me stop you on that. So you can buy a house
Yes.
with a reverse mortgage. Wow. Okay.
Yeah. So it's
Interesting.
it's interesting because you would think that, okay, maybe this reverse mortgage product is for the person that's been in their house, they paid it down all the
That's what I've
way.
always heard of.
Yeah.
Exactly.
Yeah, and so it can be used to purchase a home, you just have to bring a significant down payment.
Hmm.
Uh-huh.
Interesting.
But
Okay.
yeah, from the point that you start your reverse mortgage, and we'll get into like qualifications and like who can do it, who can't, who it's good for. But from the point that you start your reverse mortgage, rather than paying a monthly payment with interest and principal, you're just going to accrue interest. So instead of making that, $1,000 or $500 payment towards interest every month. That's just added to your loan balance. And so it's really good for the person that's feeling like a little bit of a pinch with how inflation's going, how
Mhm.
maybe their income's staying the same, but all their expenses have gone up, right?
I was
So
gonna say,
yeah,
because it sounds like it would be, I just recently talked to someone who they retired,
yeah,
and then they said, "I feel like maybe I retired just a few years too soon,"
yeah,
and, they're feeling a little pinched, I think, on the house, but then they have the house pretty much paid off.
yeah.
So would that be a good person? Would that be, somebody that would, benefit from that?
Yeah, so it depends. So let's go into some of the qualifications.
Okay,
So on a reverse mortgage, the minimum age requirement is 62. So you have to be 62 years or older. You have to have at least about 40 to 50% equity in the house,
okay.
meaning that you owe 40%, or you have trying to think of the best way to
Let's do
explain
like
it,
a
but
million. Like
yeah,
if
so
their house is worth a
yeah,
million.
so if the house is worth 1,000,000, then you owe 600,000 or less, right? So you've got
Okay.
about 400,000 or more of equity in the house. So if you've got that equity position where you owe a lot less than what it's worth, and then if you are of the age of 62 or older, you may qualify for a reverse mortgage. Now, does a reverse mortgage make sense for everybody that qualifies for one? No, no, it really doesn't. Um, so, like, I could give an example of somebody that it works well for and somebody that it
I love that.
doesn't.
Let's do that.
Yeah.
Yeah, because I think that's where, again, I feel like I know enough to be dangerous,
Yeah.
right, to myself and others in this arena.
Yeah.
But I'm glad to know about the age of 62
Yep.
because that's really important. And then maybe, yeah, like let's think of two scenarios.
Yeah, so scenario 1, I'll give my parents as an example. So, they live in the house that I grew up in. The house has been paid off for many years. They're both retired, and, they make enough retirement income to where they don't know what to do with it because 'cause they're very
Okay.
conservative people. They're just saving all this money, right, every month, like, trying to do stuff for the grandkids and, just
Right.
trying to invest it wisely, right? So for them, I mean, what do you think? Just on the surface, do you think that a reverse mortgage would be
Well, I
right
would
for them,
think
or what do you
maybe
think?
not if they have enough cash flow,
Yeah,
enough income coming in per month, then that might not be the best thing.
yeah,
Is that
yeah.
right
I
or
mean, that's my
wrong?
opinion too. Yeah, so put you on the spot there a little
Yeah,
bit,
no,
but
I'm glad.
yeah. So for them, if they were to take out a reverse mortgage, then they would just have more
They'd have more
money,
money that they'd
right?
have to think about what to do with,
Yeah, exactly. So the
which is a good
highlight.
problem to have sometimes, but
It
I'm just
is.
saying.
It is. So it's, for them, I feel like having their house paid off is a really big deal to them, right?
Yes.
Um,
And I do have a lot of clients that that's just how they want it, right?
yeah.
It's like that's their number one goal is just having their house paid off,
Yep.
But then I have others that are saying, as long as I have enough equity position in the house, like if I have 50% equity in the
Yeah.
house, then they're okay.
Yeah. Yeah. So, for my parents as the example, in my opinion, it doesn't make a lot of sense for them because there's not a need for cash, right?
Right.
They don't need cash for like a big repair on their home. They don't need monthly income.
Mhm.
They've already got those things taken care of. So it doesn't really do anything to solve any problem for them. Second example would be I have this client that I did a normal refinance for maybe 5, 6 years ago, and very fixed income. She was on, her and her husband were on Social Security only,
Mhm.
and they bought their home maybe 20, 30 years ago when they bought it for like 100K, and the home value had gone up to maybe 400K, right?
Mhm.
But, so they owed very little against the home, but they wanted to get that payment as low as possible through refinance because it was tight, right?
Right.
So rates were really good, so we got them in an amazing interest rate, but things were still tight.
Mhm.
And then her husband passed away, and so all of a sudden her income went down, right?
Right.
and they didn't live an extravagant lifestyle, so it was just basically the Social Security income paid for groceries, right?
Mhm.
And all of a sudden there was less coming in. So we looked at refinancing. We couldn't get any lower because rates had gone up from what she got it at. She got it at a low. And this was my first reverse mortgage that we did. But we looked into that product for her and it made a ton of sense.
Right.
She had been putting off repairs on the home because she didn't have the cash for it. And then on top of that, she was struggling monthly just to to come to my office because she was, that generation where they want to come to the office,
Yes.
right? Instead of
Yes.
emailing stuff. So anytime she had documents, she would come to the office and she was like, hey, I'll come next week because I don't have like the gas
Oh,
money,
that's
right?
so sad.
Yeah.
Right.
So it was
Yeah,
like
that's
that
hard.
situation where it was just very tight. So for her, the reverse mortgage made so much sense because we got her a lump sum
Mhm.
to where she could fix the roof and the kitchen. And then she, rather than having a monthly payment on the mortgage, she takes a monthly draw every month. So she has income from the mortgage where she gets $550 a month roughly,
Wow.
rather than having a payment.
So she was able to get, so with a reverse mortgage, she was able to get a lump sum of cash and then a monthly, basically like a draw,
Yeah.
right? I mean, it's basically a monthly payment of some cash then to her.
Yeah. Yeah, so it was really cool because you're able to use your equity in different ways depending on your situation. The An interesting thing is the older that you are, the more you can draw.
Hmm.
But so if you're just 62, they're going to limit how much you can pull out because the idea of the reverse mortgage is it's really designed to help somebody that's in their forever home live comfortably using their equity to help out with some of their expenses, right?
Right.
And so if you're 62 and you try to max it out, you would run out of equity pretty quick.
Okay.
So there's a lot of safety nets in there to make sure that you never owe more than your home's worth. In fact, one fun fact and kind of like a myth to bust with a reverse mortgage is, oh, will the bank take the home or will
I
we
have heard
have,
this. Yes.
yeah, will we have more debt than it's worth? Does it put my kids in a bad
Mhm.
position? And the reverse mortgage, it is an FHA product, so a government backed product.
Oh, I didn't know that. Okay,
Yeah,
so it's okay,
it's an
explain that
FHA
again.
loan. Yeah, so
Really?
yeah, it's through the
Okay.
Federal Housing Administration, and it has a monthly mortgage insurance premium,
Hmm.
just like a normal FHA loan would. But instead of you paying that premium, it's added to your loan balance, right?
Right.
But then at any point, if somebody took out their reverse mortgage at 62 years old and they lived till they're 100, and if let's say home values didn't increase much, right? Like hypothetically.
You've already read my mind. I was gonna ask this question. So, yes, what happens then?
Yeah, so somebody could owe more than it's worth
Okay.
if they took out a chunk, right? And then they had a monthly draw. Their balance could exceed the value because we don't know what home values will do. Typically, they go up.
Mhm.
But the FHA product, it protects both you as the consumer and it protects the lender. The FHA will step in if they ever exceed. Like, let's say that somebody's reverse mortgage, their balance
Mm.
exceeds the value. FHA will make it so they only have to pay 95% of the value at the time that they sell the house.
Oh,
Yeah.
okay. Interesting. Because I've heard of a situation actually right now down in Las Vegas. My sister lives down there, and
Yeah.
her neighbor ended up living to almost 100 years old. So, kind of
Yeah.
this exact scenario.
Yes.
But the market, since she got the reverse mortgage, has gone down
Yeah.
really steeply because it's Las Vegas right now. That's one of the housing markets that's been, hit really hard right now. And so I think they're trying to figure out kind of the balance, and then it sounds like then does the bank take it over? I'm not really sure. How does
Yeah,
that
so
work?
no, so that's a good question. So her heirs would be the first people that have the first right of refusal for the house, right?
Okay.
And they would have the opportunity to buy the home for 95% of today's value.
So 95% of today's value.
Yep.
Okay. Interesting. My
Yeah,
sister
so
just asked me this question, so
yeah.
I'm really excited that I get to call her and tell her.
Yeah, it's a
Okay.
great question because you hear a lot of scary things about
That's
it.
what I was gonna say, because 'cause I've heard I mean, I think the questions I get from my clients are, "Can somebody take away the home?"
Yeah.
And so, okay, so the heirs would be able to purchase the home basically
Yeah.
at 95% of today's current value.
Yep, there would be
Okay.
an appraisal done,
Mhm.
they would the most they would pay would be 95% or the balance owed, whatever is lower.
Okay.
Yeah. So, there's that safety net in there. There's also, before somebody can do a reverse mortgage, they have to meet the age requirements, they have to have the equity requirement, but they also have to do, a course, like some home, like education for doing a reverse mortgage. So they can't go into it blind. They'll have to go through the course and pass it off and make sure that they're fully aware of how it works.
Okay.
Um, so it's really good for my example of this lady that was on a fixed income. She had some expenses that she
Mm.
couldn't afford to do. It would be bad for the person that everything's fine right now.
Yeah, like they don't need extra monthly cash then,
Yeah,
right?
if they're just hearing the buzz, like if anybody's just hearing the buzz, like, oh, should I do a reverse mortgage? I'm old enough, I have
Mhm.
enough equity. If you're not having a hard time with monthly payments or you don't have any big expense that you can't afford, a reverse mortgage may not be the right product for you.
Okay, that's interesting.
Yeah,
It might be a HELOC,
yeah,
or because a lot of people call me about HELOCs, home equity line of credit,
yeah,
if people are wondering. And so that's interesting. What about, walk me through exactly like what kind of percentage rate is this at? Does it follow the current market? So I
yeah.
guess does reverse mortgages, do they follow the same interest rates?
Yeah. Yeah, so they do. It will be like a reverse mortgage right now is going to be in like the sixes and sevens. And you can do a reverse mortgage that's fixed or variable. And so it has very similar options to
Hmm,
what you could do otherwise. The big
interesting.
differentiating factor, excuse me, is just that rather than paying the interest every month, you're just letting it accrue on your balance.
Okay,
Yeah.
so then it's accruing, yes, okay, on the balance. Okay, that makes sense.
Yeah.
Can you refinance a reverse mortgage?
Yeah, yeah. So I've had a client that did a refinance of a reverse to a reverse. So we just helped him to take advantage of a lower rate,
Mhm.
and to pull
So
out
maybe they
another
had like a
check.
fixed rate and then they went to a different
Yep.
fixed rate or like a variable.
Yeah. So they had a
Okay.
fixed rate, but it was locked in at a time where the rate was higher. So we were able to lower their interest rate, but then their home had appreciated a ton, like we all saw a few years
Mhm.
back when home values went up so high. So they had a ton more equity than they had pulled out the first time. And so they had a bunch of needs with the house, so they were
Mm.
able to access some of that to take care of their needs.
Interesting.
Yeah.
Okay. Is it the same qualification, other than the age? Basically, is it the same types of qualification process like that it would be to apply for a standard conventional mortgage?
That's a great question. I'm glad you asked that. So, with a reverse mortgage, the difference between that and a standard mortgage is that they're going to look at how much income you have to pay your living expenses.
Mm.
So they factor in homeowners insurance and your property taxes, but also just like a basic standard of living. They want you to have a certain amount left over to pay all your other things. So they won't ever put you in a position uh, to, I guess, be in trouble with a reverse mortgage. But they want to make sure that you're able to pay those minimum things like your homeowner's insurance and your property taxes.
Does it count? Here's another very specific question.
Yeah.
But does it look different on a credit report, for example, or if someone has a reverse mortgage, if they apply for a credit card, are they penalized more or is there any penalty to that?
Yeah, so it's a good question. The reverse mortgage won't show a payment. So, you won't have that counting against debt to income
Okay, so
ratios
it
for other
won't show
things.
up then.
Yeah,
Huh,
because you don't have a payment.
that's true. Okay.
Yeah, it's
Yeah,
basically
right.
just an asset that you're drawing from every month.
Okay.
it's kind of just like a large bank account that you've worked
You're
hard to
just
build
yeah,
up,
so you're just paying
and you're just
back.
pulling from
Okay.
it every month, essentially, right?
Mhm.
So yeah, it doesn't hurt you on your ability to borrow with other types of financing.
Okay, so you would be able to do, get a credit card
Yeah,
still. If you have a
yeah,
reverse mortgage, I think that's one of the questions someone asked me was, if I have a reverse mortgage, can I still apply for a credit card?
yeah,
Or can I also, the other question I've had is, if I have a reverse mortgage, can I refinance a reverse mortgage? Which is yes.
yeah.
And could you go from a uh, basically a fixed rate to a variable rate?
You can if you'd like, yeah.
Okay.
Yeah, so you could refinance it from a reverse to another reverse with a fixed or variable. Or I had one guy that bought his house using his reverse mortgage, and interest rates were so low, and he was able to make payments. So he said, I don't love the idea of using the reverse and having my equity, slowly drawing from it.
Hmm.
I have the ability to pay it down, so I'm going to go to a normal mortgage. So we refinance the reverse to a regular mortgage. The thing to remember is you still own the house.
Okay.
So if you do a reverse mortgage, it's still your house. You get to decide what type of product you use for financing it.
Okay.
Yeah.
That's really helpful. I'm trying to think what other questions would we have around it as far as how many years is it? Is it a 30?
Yeah. So that's a good question. Because yeah, I think it is amortized like a 30-year loan.
Okay.
But you have it until you move out of the house, sell it, or somebody passes on. So those are,
Okay.
yeah, there's not a limit to how long you could have it.
And I was not aware that you could actually purchase a property with a
Yeah.
reverse mortgage because that to me is a really interesting concept. So would it be then kind of walk me through that process? It sounds like it's for somebody that maybe is putting down, they want to put down a large sum of money on the home. Is that
Yeah.
correct?
Yeah, let's say that you've got a client that wants to, or somebody wants to, buy a home, and they've got 60% or more that they could put down, but they don't wanna have monthly payments.
Mhm.
That's kind of the scenario where a reverse mortgage works for purchasing. Let's say that somebody that's 62 years or older has that large down payment, and for whatever reason they're needing to get into something different. In that situation where they're needing something different to meet their needs, right?
Yes.
But maybe that next house that they need is a slight increase on the purchase price, so they can't pay all cash,
Mm,
but they don't want to have monthly payments, right? So it'd be really great for somebody in that type of situation.
okay.
Um, one thing that some people have gotten in trouble not realizing that they had to pay their taxes and their insurance on it. So that's why I brought that up a couple of times. That's one thing, they will still have to cover that, but you could do a monthly draw from your equity that covers your taxes and insurance if you wanted.
That's true because they could just use a title or escrow, right? I mean, they
Hmm.
could just have something um, eh, that way they know what they're basically paying out every month. Is that right?
Yeah, yeah. So if
Okay.
somebody, let's say that situation where they bought the house using the reverse, they just don't want any payments monthly, right? So in that case, they could uh, buy the house and then take a monthly draw of $300 or $400 that would just cover their taxes and insurance.
That's so
Yeah.
interesting. Wow. Well, that's really good. I'm trying to think, is there anything else we need to know about reverse mortgages?
I think the downside to a reverse mortgage is the closing costs are higher on a reverse mortgage. If you were financing a home, like you were only financing 100,000 or something, the closing costs would be really low on a refinance or
Hmm.
purchase for that because it's based on the loan balance. On a reverse mortgage, because it has the potential to go up, the closing costs are higher. So that's one thing to watch for is
Is it like
get
double or just
yeah,
even
I would say
estimating?
yeah, I would say,
Okay.
plan for about double what a normal, type of loan would cost you. And then the other thing is obviously it depends on if you're trying to leave behind a ton of equity for your heirs, right? Or if you are okay to use that money to help make life easier for you, while you're in that home.
Yes.
So
Okay.
it's just kind of the give and take. Like this client, the first one that I did, her kids all signed off on it. They said, "Mom, you need the money. Like we
Mm.
don't need the money." And it's a really great thing for seniors that are needing help from their kids currently, financially. Like, use that equity instead of the kids having to come out of pocket.
Yeah, that is, I know a few people in that situation. So
Yeah.
that's really interesting. And I do have some clients that, just like you're talking about, that they're close to paying off their home, or it's, kind of, they have a large amount of equity, like maybe
Yeah.
90%. What about for veterans? Is there any like special consideration for veterans on mortgages?
Not that I'm aware of. So the reverse mortgage, again, it's an FHA loan product, and they're looking at equity and age. Those are
Those are the main
the main
criteria.
factors.
Okay.
Yeah.
Okay. Well, that's really interesting. Well, I'm glad you've had, been able to explain this a little bit today. Do you think as interest rates go down, will we see more reverse mortgages, or what is the trend with them?
Yeah, no, that's a great question. I think we will see more people doing reverse mortgages as interest rates go down, because your ability to borrow increases
Hmm.
because they factor in your future interest that you're going to pay. That's part of the whole equation. So you don't need as much equity if interest rates are half as much, right?
Right. Oh, that's
So
true. Yeah,
yeah,
that's right. Okay. That's interesting. So, speaking of kind of the market in general, we're in August 2025, like the very last few days of August
yeah.
2025 right now. So, this may not be as pertinent later. But I do get a lot of questions from people that are saying, where are we headed? Everybody's talking about, we've been talking about interest rates going down for a little while now. But I really do think they are.
I sure hope so.
This time, right?
Yeah. Yeah, so
And
I
I won't hold you to this, by the
no, yeah,
way.
yeah, it's just our opinions, but I feel like as the Fed starts to ease rates, which it sounds like they're going to do some cuts, hopefully in the near future. A lot of I think like 85% of the analysts are predicting that in September we're going to get a Fed rate cut. That doesn't directly impact the mortgage rate, but I do see a future where we're going to get some rate cuts from the Fed, and we may get like a slight easing of interest rates with mortgages. I wouldn't say that we should wait to see rates decrease to buy the house or to do anything like that, or a reverse mortgage. If you wanted to do a reverse mortgage on a variable and just wait for the rates to go down, then
Yeah, that
that
sounds
would
like
totally
actually a
work.
really good option. And as we've talked about this, and we're seeing even right now, I would say even just in the last few weeks, we've had more buyers enter the market right now
Yeah.
because they're hearing that there's going to be a rate cut in September. That's kind of what's buzzing around. And I think what I'm seeing is the people that are kind of understanding that a little more are the ones getting into the market, and they're saying, it's better that I pay the lowest purchase price right now
Yes.
and get in and then, refinance later. Because purchase prices are, I would say they're pretty much at the bottom right now. In fact, I actually think we're starting to come out of that. Just in the last probably 3 weeks, I've had probably three or four clients that have gone to multiple offer,
I'm
which
seeing the
is
exact same thing.
wild,
Yeah,
wild.
my last 2 clients to get under contract had multiple offers. And so I'm starting to see that.
It's funny how things change so fast in
Yeah.
Utah. I feel like Utah, it's like things change overnight,
Yeah.
And so, like, I had someone call me the other day. He's an investor, and he's like, "Well, haven't you gotten the memo? Like the housing market's down." And I said, "Actually, okay, that was a few weeks ago."
Yeah, that
I
was
said,
yesterday.
that was
Yeah.
yesterday's news. But today, actually, and even just since this weekend, we're just about ready to hit Labor Day weekend,
Mhm.
and this weekend before. We've had, like I said, multiple scenarios of multiple offer. We also have seen homes that have been on the market for 90 days or longer actually go under
Yeah.
contract now as well. So, like ones that have been sitting for 3 months. So,
You were telling me
I'm
you had
seeing
one,
this. I
right?
did. I had two actually.
Okay,
I have
yeah.
two at like that, and we just went under contract yesterday and the day before. So we're. I feel like we're turning and it's really quick. And
Yeah.
one of the things Gary Keller said not very long ago is he said what he's afraid of is that he said it's like we've had all these buyers on the sidelines. And
Yes.
he said it's like we have this rubber band, we've pulled it all the way back. And he said when the market shifts, he said it's going to be when, like, just when somebody, lets go of that rubber band after being pulled back. He said it's going to change like almost overnight. And I'm seeing that. And at first, when he said that, I said, really? Like, because there's some ways where I do feel like it is a slower turn, in some aspects of real estate. But right now, I'm almost afraid of what's going to happen because of what I just saw this last weekend
Yeah.
was very similar to what I saw few years ago.
Like 2021,
Yes,
2020.
yes, and I
I
even
couldn't
kind of am
agree
like,
more.
this is scary. I don't, we showed up at an open house and there were 15 groups of people.
Yeah.
So very crazy.
Well, I mean, if you think about it, in 2020, 2021, there was a decent market before that, right?
Yes,
Where
absolutely.
people were buying homes,
Yeah.
right? But the thing that will make this a lot different is we've had like 3 years of people sitting on the sideline.
I have a whiteboard. My assistants just joke around about because I'm very visual, right?
Yeah,
So
yeah.
most people have spreadsheets. I have a spreadsheet too, but
Your spreadsheet's on the
yes,
whiteboard.
but my spreadsheet's also on the whiteboard, and
Yeah.
I have a whiteboard of like buyers' names, and I mean, I probably have like 30 buyers that
Yeah.
that are just like they haven't been ready to move forward, and some of those names are coming off right now,
Yeah.
and they're getting back in, and so right now, while pricing is low and we're going into fall, I think right now is such a good time to buy. What most people don't know, for me, a lot of times my fall is actually and beginning of winter is my busiest season because you get investors in, people
Yeah.
meet with their accountants and they say, oh, maybe I should buy a property, or maybe it is the right. If they're empty nesters, a lot of times they've been busy in the summer,
Yeah.
or if they have kids at home, and then all of a sudden they're saying, you know what, maybe I buy before the end of the year. There's some tax advantages there
Yeah.
as well, which
Yeah.
we're going to have you on another episode to talk about that tax
Yeah.
advantages and real estate because there's even been some discussion about what we call the triple B, the big beautiful bill, and there's
Oh,
some
yeah.
things in that also benefit my clients when it comes to purchasing properties right now. And what I've been surprised at is nobody's really talking about those right now.
Interesting.
And
Yeah.
so there's a lot that's going on right now, and we're starting to head into a different market, I think. Or I don't know if it was just a really crazy weekend, but with how busy we were this last weekend and how many of the transactions when I was with buyers or with my clients that are selling, it seems like it was all traction or no traction. And all of a sudden we have, like I said, I think we put 4 homes under contract in less than a week.
Wow.
So, and we're still in competition on a multiple offer right now that you know about.
Yes.
So yeah, so we're in that right now. So if you're thinking about purchasing before the end of the year, or if you're saying, oh, maybe I should wait till spring, I'm going to tell you right now, do not wait till spring
Yeah.
because I'm actually a little afraid of what spring is going to look like. And I think spring is going to come early. This is all, of course, world according to Heather Groom, but I do think we're going to have an earlier spring. I think it's going to be a late January, February. People are going to start going, oh, I better hurry before inventory's low again.
Yeah.
Because again, we haven't kept up on inventory,
No.
and so because of COVID, we've still been behind since COVID on inventory and in some products. And then we've had this influx of homes on the market. But then we also right now, we've not had the building as far as just to keep up with our growth. And in Utah, we're a high growth state, and we have basically the predictions are, usually we're in the top 5 states
Interesting.
for
Yeah.
growth. And so I'm already seeing a lot of the Californians coming back.
Yeah.
I have actually a lot of clients from Texas right now, which is
Interesting.
interesting.
Yeah.
And a lot of times we have people going to Texas, and the reason is just because insurance right now, like because of if they live in an area that's had flooding or roof damage, like hailstorms, hurricanes, people in Florida, Texas, some of those Gulf areas, their insurance premiums are doubling and tripling right now.
That's
And
crazy.
actually, I just talked to even a couple not very long ago, and they're between their taxes, because then also their taxes have doubled. So between their taxes and their insurance, it's almost as much monthly as their home payment. And so it's really forcing people to analyze that and say,
Yeah,
okay, what
rethink
can
it
I do?
all.
One thing about Utah that's great is we don't have hurricanes.
Yeah,
We usually don't have tornadoes or earthquakes. I'm going to say usually.
we're pretty
you know,
boring,
we're
right?
kind of boring that way.
Yeah,
And so we don't have a lot of the natural disasters that other people have. Like in
yeah.
Houston, I've been picking up actually quite a few clients from Houston where there's flooding, a lot of flooding.
Mhm.
And so anyway, I think that we're going to start seeing people coming back into not just this market, but in Utah specifically. I'm picking up, I'd say about half my clientele right now are people moving here from other states.
Yeah, that's interesting. I think one issue we're gonna run into as well is people are holding on to their current homes and
Yes,
mortgages.
because it's 2.75 or
Yeah.
3%, right?
So it's
Yes.
like they're holding their current homes, they're not buying that next home, and the builders can't keep up with the demand. So it's going to be really interesting when interest rates come down even a quarter or half a
I think in
percent.
Utah, we're gonna feel it more than other
I
markets,
think so.
and we're gonna see it. In fact, I'm already seeing it. It's interesting talking. I network with top agents around the country, and my friends that are in other markets, like San Diego, for example.
Mhm.
In downtown San Diego, they've been hit really hard, and they're not coming out of it yet. And
Yeah.
so, what I've usually seen with the housing market is Utah is one of the first states to emerge out of a recession. Like I remember back in what was that 2010 when we had the
Mhm.
the economic meltdown. I remember just being on the Wasatch Front. Our and I remember it was almost kind of overnight. It was like it was fall to winter and then to spring. And I remember all of a sudden our home values started going up and appraisals became really difficult because that becomes the next problem
Oh my
because
gosh.
then we're going to have
Yeah.
appraisal problems. And so I just remember we were coming out of it. And then a few months later, I usually see St. George come out of it. And since I serve both Salt Lake market and St. George market, um, St. George usually follows and then it spikes really fast. St. George market is really fast to spike one direction, up or down, and it follows more the Las Vegas market. And then I remember driving through the gorge, going to Vegas, and still seeing all these for sale signs. I'll never
Interesting.
forget that in my life because I remember kind of it was just like as I was driving, seeing how things were changing in our market and going under contract. And then about 2 months later in St. George, and then it took about 4 to 6 months for it to trickle down into Las Vegas market.
Interesting.
And then it did take Las Vegas about a year to really kind of come out of it.
Yeah.
But Utah's usually really fast to come out of those things. And a lot of it is because we have low taxes, low crime. We have, it's a good place to raise kids, good public schools.
Yeah.
And so people just, they're coming. They're coming. So
Yeah.
I think right now we might be seeing that rubber band snap. So anyway, that's
Yeah,
kind
I
of the
think so.
market update, I think, for now. But I'm so glad you came
Yeah, thanks
today,
for having me.
Jamie. And we're going to have Jamie on again and talking about different products and loans. So if you have certain specific questions about those, message me. However, you're watching my podcast, whether it's through Facebook, YouTube, Instagram, just send me some messages, give us some feedback. We'd love to hear from you and let us know if there's a certain topic you'd like us to cover. Thanks so much for joining us on High on Utah. Bye bye.